Hey everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Roster of Victory Fiduciary, and today what we want to get into is just the fact that we're really right in the middle of earnings season and just kind of how that has the potential to sway markets, certainly within the short term, as well as kind of what we're seeing within our long-term trends. And so earnings season really kind of has the ability to kind of sway markets up or down. Again, in the short run, today's a great example. So Tesla reported earnings last night. Today, Tesla's down over 4%. And that's really because while their earnings numbers look good, it was really being supported as they were liquidating Bitcoin and some other kind of like side investments as opposed to actually like straight auto sales. So investors kind of view that as a sign of weakness that while yes, we're seeing positive numbers being reported by Tesla, it's not actually from them selling Teslas. So today that's really creating some drag on the S&P 500 and the Nasdaq particularly. And so that's it. The indexes can be greatly affected. Another example would be, so this week is a huge earnings week for Microsoft, Alphabet, Amazon, Facebook, Apple. They're all slated to have either already reported or they'll be reporting by the end of the week. And so those 5 companies make up 40% of the market cap of the S&P 500. So as you can imagine, that can really kind of set the tone for what the index is going to do when we see such concentrated market cap. And so we continue to really see earnings kind of coming in. They are beating expectations broadly across the board, although I think that you might say that earnings potential has still kind of been cautious. Analysts have been somewhat cautious as they give what their expectations are, which sometimes can make it a little easier to beat expectations. But that being said, so it's been mainly positive though, what we've seen. S&P 500 and Nasdaq both actually ended at record levels yesterday, and that is really important because as you can remember, the Nasdaq particularly has been under significant pressure since the middle of February. February 11th, we really we saw technology really have some deterioration. Actually, why don't we show you that real quick right now while we're talking about that. And so to see that we actually are now hitting new highs within the Nasdaq is certainly an encouraging area. And so you can see from mid-February we came down. We did actually cross below a support, came up, hovered up here, came back down, and then we've kind of had a nice recovery since then. This our 50-day moving average there really does give us a nice line of support for the Nasdaq, but really has been under pressure. And that, again, when we talked about how far deviated we were from long-term moving averages, wasn't really surprised to see that we went through a correction. When it was all said and done, it actually was about an 11% correction that we saw. And again, so it burned off some of that excess, because remember, in order to kind of bring ourselves closer, and listen, we're still extended. I mean, when you look at where we are here from our longer term, but certainly from at least the 50-day, we're a little closer than where we were back in the middle of February. And again, we've kind of been trading sideways here for a little while. That allows us to continue to burn off some of that excess. So I would say all in all, this is probably a positive sign for the Nasdaq. It gives us the ability to go on and reach new highs, such as what we did on Monday. Now today, trading's been somewhat choppy in all of the indexes. Really, small caps have been mostly positive, but the Dow, S&P, and Nasdaq have all been modestly negative. And again, in earnings season, it's kind of like investors kind of tend to tread a little lightly as they wait to kind of see what some of these reportings are going to be, particularly forward-looking. They really want to see what these companies are looking at. But I would say this is kind of a good sign for the Nasdaq as we've seen this nice recovery. Go ahead and I can show you what the S&P 500 has been doing as well. S&P 500's pullback though was not quite as excessive as the Nasdaq's was. But we can see here really came down and we hit our line of support, and the S&P has actually really done an okay job, but the Nasdaq had been running quite a bit more extended, the S&P was, so not entirely surprising what we've seen. And so something else that's going to be going on this week, Federal Reserve is going to be meeting tomorrow, and so investors, again, kind of waiting to see what kind of guidance they give. It's really expected that probably not a whole lot is going to change between what we heard last month and what we hear. But, at some point, I think investors are going to want to hear from the Federal Reserve, like, what are they thinking regarding inflation? Are they going to continue to be buying bonds? And there's all now these other inherent risks that are kind of in play as a result of just some of like the soaring asset prices that we continue to kind of see. And so at what point are they going to step in? Because really the only way to kind of slow down inflation would be to raise interest rates. And so I don't foresee that there's going to be significant updates tomorrow, but I think every time that the Fed meets investors, these are questions that are on their mind. And so something else that was just interesting. So in April, consumer confidence actually jumped to a 14-month high. And this is likely because of, we receiving additional stimulus. Vaccinations have begun to continue to increase. Businesses are opening, schools are opening. So demand is finally really rising. We actually saw last week that for the first time in quite some time that the new unemployment claims were sharply lower than they'd been. Again, this is a good sign to see that the reopening, has really continued to flourish, that we have installed. And so, we're just going to have to wait and see if that trend is able to continue. But for, starting off Q2, I would say that we're seeing some positive signs. And so we really just need to get through the rest of this earnings season that we're in right now and see. And again, there's really not been any huge surprises with earnings. So continue to kind of watch that. So that's really all that I wanted to get into today. It was a bit of a shorter video, but again, markets have really just been kind of holding their own. So we will definitely be checking back in if anything else changes in the meantime. Thanks for tuning in, and we'll see you next time.